Hey everyone, welcome back to Corporate Decoder, the place where we look behind the curtain of big businesses and try to make sense of their filings this year. Amplify ETF Trust filed their annual report, and let me tell you, it is a beast of a document packed with information about their many funds, from AI-powered equities to cannabis and even Bitcoin strategies. So buckle up, because we're about to dive deep into their financial performance. I hope you appreciate getting straight insights from corporate documents. Make sure you are subscribed. And we also have a Discord community linked in the description below. First up, the Amplify AI-powered equity ETF, better known as AAHE. They reported a return of 19.68% for the period, which is pretty solid, beating the S&P 500 17.60%. The strategy here is to use artificial intelligence to pick stocks from within the S&P 500, and it looks like the AI favored sectors like information technology and communication services. Top contributors to performance were Nvidia Corporation and Strategy Incorporated, while Tesla Incorporated and Starbucks Corporation were the detractors. Financially, this fund had 161 holdings and close to $117 million in net assets, with a portfolio turnover rate of over 800%. That is a lot of buying and selling, indicating an active AI strategy. Next, we have the Amplify Alternative Harvest ETF, or MJ. Now, this one saw a NAV total return of negative 5.70%. The fund focuses on the cannabis industry, and the report notes regulatory uncertainty and federal legalization questions as major performance dampeners. So even though healthcare was a top contributing sector, real estate was a big detractor. Their net assets are around $200 million with only 12 holdings, which is quite concentrated. Interesting notes here say that Seymour Asset Management LLC was appointed as an additional sub-advisor, and the fund also underwent a 1-to-12 reverse split, which means for every 12 shares investors held, they now have 1 share, but at 12 times the price per S-Hair, and that happened in February. Now, for something a bit different, the Amplify Bitcoin 2% Monthly Option Income ETF, or BIDI. This ETF is pretty new as it began operations in April of 2025, and so far it has seen a NAV total return of 23.27%. This fund is actively managed, it does not track an index. The strategy seems to involve long exposure to Bitcoin and selling out of the money call options on Bitcoin ETFs. They are aiming for about 2% in monthly option premiums. Top holdings include an Invesco government and agency portfolio with a hefty 58.2% stake, and the Issues Bitcoin Trust ETF at 22%. Financially, they have about $20 million in net assets with a portfolio turnover of just 3%, which makes sense for an income focus. Following suit is the Amplify Bitcoin Max Income Covered Call ETF, or BAGI, which is also quite new, starting in April of 2025. It boasts a NAV total return of 23.56%. Similar to BIDI, it holds a significant portion in an Invesco government and agency portfolio at 75.1% and employs a covered call strategy on Bitcoin ETFs. Financially, this fund is a bit smaller with about $16 million in net assets and a portfolio turnover of 251%, which is quite high. Let's look at the Amplify Black Swan Growth and Treasury Core ETF, or SWAN. This fund focuses on US Treasury holdings and equity exposure through long-dated call options. It returned 9.04% for the period, but underperformed the S&P 500, which was up 17.60%. The report highlights that the LEAPs contributed 6.28% to returns, while Treasuries contributed 2.76%. This suggests the equity portion through LEAPs appreciated, but the smaller allocation compared to Treasuries limited overall growth. They have close to $267 million in net assets and a portfolio turnover of 43%. Then we have the Amplify Black Swan EZN ETF, or ISUN. This fund returned 6.25% for the period, underperforming the MSCI ETH index, which was up 14.99%. Similar strategy focusing on US Treasury holdings and long-dated call options. The report states this underperformance was due to the smaller equity allocation. The fund has about $33 million in net assets and a portfolio turnover of 38%. A notable change is that effective the 3rd of October last year, the fund's index methodology changed to include flex options. Now, for the Amplify Bloomberg AI Value Chain ETF, or AIVC, this fund saw a NAV total return of 32.09%, outperforming the S&P 500. The fund tracks the Bloomberg AI Value Chain Index and has heavy concentration in information technology companies involved in AI hardware, semiconductors, and cloud technology. Top holdings include Western Digital Corporation and Broadcom Incorporated. With 44 holdings and close to $32 million in net assets, its strategy seems well aligned with current market trends. They also made significant changes to their index provider and investment objective around October of last year. Next is the Amplify Bloomberg US Treasury 12% Premium Income ETF, or TLTP, this fund had a NAV total return of 0.93% since inception. It seeks to track the Bloomberg US Treasury 20-plus year 12% premium covered call 2.0 index. The core exposure is to long, duration US Treasury securities obtained through iShares 20-plus year Treasury bond ETF, and actual Treasury securities. The ETF's price decline was a headwind. They pay monthly distributions and employ a covered call strategy on the underlying ETF TLT. The fund has about $11 million in net assets and a portfolio turnover of 92%. Moving on to the Amplify Blue Star Israel Technology ETF, or ET, this fund had a NAV total return of 22.52%. It tracks the Blue Star Israel Global Technology Index. The fund has significant exposure to Israeli technology companies which experienced volatility due to regional geopolitical uncertainty. Overperformance in information technology was offset by detractors in healthcare. Net assets are around $102 million with 57 holdings and a portfolio turnover of only 19%. Now, the Amplify Cashflow Dividend Leaders ETF, or COWS. This ETF returned 10.04% for the period tracking the CowSet index. It underperformed the S&P 500, which was up 17.60%. The report pins this on the fund's focus on dividend-paying companies, which meant it was underweight in the high performing information technology sector, while utilities and communication services contributed positively. Energy and consumer staples detracted. Notable is their net advisory fee, which is $0. They have 52 holdings and $23 million in net assets. Following COWS is the Amplify COWS Covered Call ETF, or HCOW. This fund returned only 2.70%, underperforming the S&P 500 by a significant margin. Similar to COWS, it invests in dividend, paying high free cash flow companies via the constituents of the Amplify Cashflow Dividend Leaders ETF and overlays a covered call strategy. This strategy limits upside potential when securities rise above the strike price, and this was a contributor to underperformance. They have 94 holdings and around $13 million in net assets. It also underwent a name change in January to reflect the covered call strategy. Next up is the Amplify CWP Enhanced Dividend Income ETF, or DIVO. This fund returned 13.56% and also underperformed the S&P 500. The strategy involves selling covered calls on individual securities, which limits upside potential. The fund has a significant neutral holding in Invesco government and agency portfolio at 5.9% and large positions in Caterpillar Incorporated, Apple Incorporated, and RTX Corporation. This fund has substantial net assets of over $5.2 billion. Then there is the Amplify CWP Growth and Income ETF, or QDVO. This is a strong performer with a NAV total return of 26.17%, outperforming the S&P 500. Information technology and communication services were top sectors. They also employ a covered call strategy which limits some upside potential. Top holdings include Nvidia Corporation, Apple Incorporated, and Microsoft Corporation, demonstrating a focus on tech giants. They have over $323 million in net assets. We also have the Amplify CWP International Enhanced Dividend Income ETF, or IDVO. This fund did quite well with a NAV total return of 28.63%, outperforming the MSCI AQUALD Index X USA. They also use a covered call strategy combined with strong security selection and selective call writing, contributing positively. Top holdings show a global diversification, with Alibaba Group, and Agnico Eagle Mines Limited being top contributors. This fund has the largest net assets of all at over $444 million. Now, for the Amplify Cybersecurity ETF, or HACK, this fund had a solid NAV total return of 27.12%, outperforming the S&P 500. It tracks the Nasdaq East Cybersecurity Select Index and is concentrated in information technology companies focused on cybersecurity. Top holdings include Broadcom Incorporated, Cisco Systems Incorporated, and CrowdStrike Holdings Incorporated. This fund is huge with over $2.3 billion in net assets. Next is the Amplify Digital Payments ETF, or iPay. This fund returned 10.16%, underperforming the S&P 500. The focus is on digital payment and processing companies, which are mainly in the financial sector. This sector lagged the S&P 500 overall. Top holdings are American Express Company, Visa Incorporated, and MasterCard Incorporated. They have about $260 million in net assets. The Amplify Etho Climate Leadership US ETF, or Etho, returned 6.52%, underperforming the S&P 500. It avoids fossil fuels, tobacco, weapons, and gambling. An equal weighted portfolio was a detractor against the S&P 500's top heavy tech approach. Top holdings include Bloom Energy Corporation and Sunrun Incorporated. They have about $156 million in net assets. Then we have the Amplify High Income ETF, or YY. This fund returned 8.40%, quite a bit below the S&P 500. It is a fund of funds strategy investing in closed-end funds that cover various categories. The report mentions that higher interest rates impacted income generating closed-end funds. Top holdings are First American Government Obligations Fund and ABD in healthcare investors. This fund is substantial with over $619 million in net assets. Let's talk silver, the Amplify Junior Silver Miners ETF. Or SILJ had an incredible year with a NAV total return of 92.77%, massively outperforming the S&P 500. This is driven by silver prices, and the concentration in mining companies' materials was the only sector. Top holdings are Coeur Mining Incorporated and Hecla Mining Company. This fund has massive net assets of over $2.6 billion and a high portfolio turnover of 47%. Continuing with the commodity theme, the Amplify Lithium and Battery Technology ETF, or BAT, provided a strong return of 36.18%, significantly beating the S&P 500. It focuses on lithium battery companies and EV manufacturers. Materials was the top sector. Top holdings include Contemporary Amperex Technology Company Limited and Tesla Incorporated. The fund has around $78 million in net assets. Next is the Amplify Natural Resources Dividend Income ETF. Or NDIV, this fund had a NAV total return of 5.67%, underperforming the broader market indexes. The strategy focuses on energy and materials sectors which lagged this period. Top holdings are First American Government Obligations, Fundflex, LNG Limited, and Petroleo Brasileiro de Petrobras. They have about $10 million in net assets. Looking at online retail, we have the Amplify Online Retail ETF, or eBay. This fund returned 24.84%, outperforming the S&P 500. It is concentrated in online retail companies within the consumer discretionary sector. Top holdings include First American Government Obligations, Fund Wayfair Incorporated, and Lyft Incorporated. The fund has over $160 million in net assets. For those looking for stability, here is the Amplify Samsung SOFR ETF, or SOFR. This fund returned 4.43%, outperforming the Bloomberg US Aggregate Bond Index. It primarily invests in short-term repurchase agreements collateralized by US Treasury securities. Top holdings are various repurchase agreements. The fund has substantial net assets of over $275 million and a 0% portfolio turnover, which is expected for this type of investment. Now, the Amplify Samsung US Natural Gas Infrastructure ETF, or USNG, this new fund started in May of 2025, and since inception has returned 12.45%, slightly underperforming the S&P 500. It is actively managed, focusing on growth at a reasonable price companies in the US natural gas infrastructure. Top holdings show a clear focus on pipeline companies like Williams Companies Incorporated, Kinder Morgan Incorporated, and Enbridge Incorporated. This fund is quite small with only $3.9 million in net assets. Back to the cannabis sector, the Amplify Seymour Cannabis ETF, or CMBS, saw a NAV total return of negative 18.97%, significantly underperforming the S&P 500. The report points to regulatory uncertainty in federal legalization as a major drag. Top holdings include Treasury Bills and Curaleaf Holdings. This fund has around $113 million in net assets and underwent a 1-to-12 reverse split in February. They also changed investment sub-advisors and its investment policy in January. Then we have the Amplify Silver Covered Call ETF, or SLJ. This is a very new fund starting operations in August of 2025. Since inception, its NAV total return is 19.33%, outperforming the S&P 500. The strategy balances income and capital appreciation through exposure to junior silver mining companies and a covered call strategy. Top holdings are Amplified Junior Silver Miners ETF and Invesco Government and Agency Portfolio. Financially, this fund is small with only $8 million in net assets. Next up, the Amplify Small Mid Cap Equity ETF, or SMAP. This is another very new fund starting in October of 2024. Since inception, it has returned 1.14%, underperforming the S&P 100 index. The focus is on small and mid-cap companies. Top holdings include Monolithic Power Systems Incorporated and West Pharmaceutical Services Incorporated. This fund is quite small with only $1.2 million in net assets. The Amplify Transformational Data Sharing ETF, or Block, is a star performer with a NAV total return of 89.20%, massively outperforming the S&P 500. This fund focuses on blockchain technology companies. Top holdings include First American Government Obligations Fund and Cipher Mining Incorporated. This fund is very large with over $1.4 billion in net assets. They also have significant activity in written options contracts as shown in their schedules. Let's talk travel with the Amplify Travel Tech ETF, or away this fund returned 8.97%, underperforming the S&P 500. It tracks the Prime Travel Technology Index and focuses on travel technology companies, primarily in consumer discretionary. Top holdings are Lyft Incorporated, Uber Technologies Incorporated, and Corporate Travel Management Limited. It has about $41 million in net assets. For our gaming fans, the Amplify Video Game Leaders ETF, or GAMMA, returned a whopping 45.88%, crushing the S&P 500's 17.60%. From January, this fund began tracking the VettaFi Video Game Leaders Index, focusing on developers, platforms, hardware, and publishers. Top holdings are Tencent Holdings Limited and Nvidia Corporation. This fund has about $50 million in net assets and a high portfolio turnover of 122%. Finally, we have the Amplify Weight Loss Drug and Treatment ETF, or TNR. This fund underperformed with a NAV total return of negative 11.39%. It focuses on companies in the GLP-1 weight loss drug industry, mainly in the healthcare sector. Top holdings are Novo Nordisk, AZ, and Eli Lilly and Company. This is another small fund with only $3 million in net assets. They also expanded their index methodology in June. Now, looking at the whole picture here, Amplify ETF Trust manages a diverse portfolio of funds. The star performers like AEQ, Gamma, and Block are showing that their specialized strategies can indeed deliver impressive returns. However, the report also highlights significant risks for some of these funds, including volatility in crypto markets, regulatory uncertainty in the cannabis sector, and the inherent risks of concentrated sector investments. Some funds like Siljar Junior Silver Miners ETF showed explosive growth driven by commodity prices. On the other hand, funds focused on more stable income, like Sofra, are performing as expected in a higher interest rate environment while still showcasing strong net assets. Several funds underwent name and strategy changes around October of last year, suggesting ongoing portfolio management and adaptation. For example, the Amplify Bloomberg AI Value Chain ETF made significant changes to its index provider and tracking methodology. The cybersecurity and AI-themed ETFs seem to be performing exceptionally well given the current market trends. The financials in this report are quite extensive. For AIE, we saw a net investment income of over $1.3 million for the year. For MJ, it was close to $2 million, with a significant unrealized appreciation of over $95 million. Biddy and Baggy show substantial amounts of written options contracts where they are on the hook for potential significant liability if the market moves unfavorably. The balance sheet for Amplify High Income ETF is huge, with over $619 million in net assets and a focus on investment companies. Junior Silver Miners ETF also shows massive net assets of $2.6 billion with an insane 92.77% return, which is incredible. Block had a stellar year with over $1.4 billion in net assets and an 89.20% NAV return. Overall, Amplify ETF Trust is offering a wide range of thematic and income. Focus products. Many of their newer funds like Biddy and Baggy are still in their early stages and navigating the complexities of new asset classes and strategies. Some of their established funds like AAHUG and Gamma are demonstrating strong performance, clearly benefiting from current market trends. The cannabis funds continue to face headwinds from regulatory uncertainty, but some like MJ are showing resilience and adapting their strategies by adding new sub-advisors. What is your take on these Amplify ETF reports? Are any of these funds on your radar? Let me know your thoughts in the comments below. If this deep dive was valuable, make sure to hit that like button and subscribe for more corporate breakdowns. Don't forget to check out our Discord link in the description below. Thanks for watching. See you next time.